Estimating and applying overhead. First, you have to calculate the predetermined overhead rate, like I showed you in the previous video. So the next step is then to apply the estimated overhead to jobs. The way that you do that is you take your predetermined overhead rate, multiply it by the actual activity base used, and that will give you the amount of applied or estimated overhead for that job. Overhead costs for each job are often accumulated and recorded in one entry. Applied overhead is credited to factory overhead. So the journal entry is to debit work in process inventory, just like we have with direct materials and direct labor. So debit work in process inventory and then credit factory overhead. Here's an example of how to record applied overhead. So remember, the first thing you do is figure out the predetermined overhead rate, then you can apply that estimated amount to the overhead account. So at the beginning of the year, a manufacturing company estimates it will incur $240,000 in overhead cost. The company applies overhead using machine hours. So that's going to be the activity base. And estimates it will use 1,600 machine hours for the year. During June, the company used 80 machine hours on job 1 and 70 machine hours on job 2. The first thing we have to do is compute the predetermined overhead rate. So the formula for that, first of all, predetermined overhead rate. And that equals the estimated overhead costs, so that total, divided by the estimated activity base. The total estimated overhead activity, the overhead costs, total estimated overhead costs is $240,000. And then divided by the estimated activity base, which is 1,600 machine hours. When you divide that, you get the rate of $150 per machine hour. So that is the predetermined overhead rate, $150 per machine hour. Second, determine overhead applied in June to job 1 and job 2. The formula for the amount of applied overhead is applied overhead equals the predetermined overhead rate times the actual activity base used. So for job 1, the applied overhead is the predetermined overhead rate, which is $150 per machine hour, times the actual activity base. So for job 1, that was 80 machine hours. So that gives a total amount of applied overhead for job 1 of $12,000. Then you do the same for job 2. It's going to be the predetermined overhead rate of $150 per hour. And for job 2, that's going to be times 70 machine hours, which gives a total of $10,500 for that job. When we add these together for our journal entry, that gives the total amount of applied overhead of $22,500. So this is the amount that's going to be used in the journal entry. So I'm going to move forward to the next slide for us to do part 3 here. Remember the 22,500 number. Now for the journal entry. Remember the number that we just calculated for total applied overhead was $22,500. So we need to record the journal entry for that applied overhead for the month of June. So the journal entry to do that is a debit to work in process inventory. And a credit to factory overhead. And the amount is $22,500. And that is how applied overhead is recorded.